Today we are breaking down one of the hottest but also one of the most debated IPOs of 2025, Ather Energy. At first glance, it looks like India's EV dream is picking up speed. Ather Energy, one of the early pioneers in electric scooters, is opening its 2,981 crore rupees IPO from April 28th to 30th. But investors have a tough question to answer. Is this a real growth story or just a flashy listing event? Let's start with the founders. Ather's co-founders are offloading 19.6 lakh shares through the offer for sale. Their original cost of acquisition only 21.09 rupees per share. And today's IPO price band between 304 rupees and 321 rupees. At the upper end, that's a 1422% gain. And while they cash out, retail investors are stepping in at peak valuations, a point that shouldn't be overlooked. The issue size is 2,981 crore rupees, out of its 2,626 crore rupees is fresh issue and 355 crore rupees is offer for sale. At listing, Ather's expected market cap will be around 13,800 crore rupees. Minimum lot size is 46 shares. Some big anchor investors are already on board. Franklin Templeton, Morgan Stanley, Abu Dhabi Investment Authority. The stock is expected to list on NSE and BSE on May 6th. Now let's look at its financials. Despite being India's third largest EV player with around 11.5% market share, Ather has never posted a profit. Revenue rose sharply from 408 crore rupees in FY22 to 1780 crore rupees in FY23, but then stagnated at 1753 crore in FY24. Meanwhile, losses widened. 344 crore rupees in FY22, 864 crore rupees in FY23, and 1059 crore in FY24. The company itself admits in its red herring prospectus, and I quote, "There is no assurance that we will achieve profitability in the future." Now, no one denies that India's EV sector is booming. Government schemes like FAME and PLI are pushing adoption. Fuel prices remain high and EV demand in Tier 2 and Tier 3 cities is picking up. But Ather faces cutthroat competition from Ola Electric, TVS iQube, Bajaj Chetak, players that already have stronger pricing, deeper distribution and higher volumes. So, what will Ather do with the IPO money? They plan to expand production with a new EV factory in Maharashtra, invest in R&D and repay existing debt. It's a positive move, but unless they fix their cost structures and scale up aggressively, cash burn will remain a serious concern. So, should you invest? On the positive side, Ather is backed by Hero MotoCorp and Tiger Global. They have strong tech focus and an early mover advantage in premium EV scooters. But on the negative side, the valuations are steep. The founders partially exiting at peak pricing, competition is brutal, and subsidy cuts could compress margins further. This isn't a safe IPO aimed at listing gains. It's a long-term bet on India's clean energy future, Ather's ability to execute, and the broader EV market expansion. If you have a high-risk appetite and a 5 to 7 year investment horizon, it might deserve a small place in your portfolio. Otherwise, it's wiser to watch this one from the sidelines. Tell us in the comments, will you apply for Ather's IPO? And if you found this breakdown valuable, don't forget to like, subscribe, and stay tuned for more insights.